Are you tired of your money just sitting in a savings account, earning a measly 2% per year? If you're ready to make your money work for you, then it's time to consider investing. So, let's say you have $10,000. How do you invest $10,000? Well, with $10,000, you have the opportunity to potentially achieve a 6% rate of return per year, which could grow your money to over $60,000 in 30 years. But why stop there? By following some simple strategies, you could even grow your money to over $250,000. In this video, we'll explore 5 different investment possibilities across various asset classes to help you achieve those kinds of returns. From stocks to making money online and crypto, we'll cover a range of options to suit different investment styles and risk appetites. Don't let your money sit idle any longer and start investing in your future. But before diving into more about that, let me first welcome you aboard for this episode of Finance Arc. On this channel, we set sail on a journey into the vast realm of financial matters, where we guide you through every step of the process and assist you in navigating the challenging world of finance, from simple budgeting advice to more advanced investing strategies. So grab your life vest and get aboard the Finance Arc. Looking to invest your hard-earned money, but feeling overwhelmed by the options out there? Warren Buffett, one of the most successful investors of all time, advises that individual stock picking may not be suitable for everyone, especially beginners. Instead, he recommends a simple and effective solution: a portfolio of low-cost index funds. So, what exactly are index funds? Think of them as a collection of investments that mirror the performance of a market index. This diversification means that your capital is less likely to suffer significant losses, making them a great choice for new investors. While the returns may not be as high as other investments, the stability and consistency make them a safe and reliable option. On average, indexes tend to increase in value over time, with historical returns averaging around 10% per year. With low fees and steady growth, index funds are a great starting point for anyone looking to invest. Plus, they offer excellent liquidity, making it easy to buy and sell your holdings when needed. So, which index funds should you consider? Some popular options include the S&P 500, Fidelity Zero Large Cap Index, Dow Jones Industrial, Invesco QQQ Trust ETF, and Wilshire 5000 Total Market Index. These funds allow you to invest in a variety of assets and offer a great way to get started on your investment journey. By following Buffett's advice and choosing index funds, you can learn about long-term investing and see your capital grow over time while preserving your hard-earned money. Another conservative investment strategy you should consider for your $10,000 is the common but never gotten old, get rid of debt at high rates approach. When you have extra cash, one of the first things you should do is pay off any high-interest debts, such as credit card debts, as soon as possible. Unpaid debts can accumulate over time and lead to significant financial stress, which is why it's crucial to prioritize paying them off. By paying off high-interest debts first, you can save a considerable amount of money that would otherwise go towards interest payments. This is especially important when your investment return rates are not as high as your debt rates. While investing can be a smart move, high-interest debts can quickly offset any potential gains, so it's crucial to get rid of them first. Once you have taken care of your high-interest debts, you can then focus on investing your money in other areas to achieve your long-term financial goals. The thought of investing in individual stocks might be overwhelming, but don't let that stop you from taking advantage of the opportunities that the stock market can offer. With some preparation and the right investment strategies, you can invest in individual stocks with confidence and potentially earn high returns. Investing in individual stocks means buying shares of ownership in a specific company. As the company performs well, your shares become more valuable. As a beginner, you can start investing in the stock market by opening an investment account and investing in stock mutual funds. This way, you can diversify your investments and reduce risk. Investing in individual stocks can potentially yield higher returns than other types of investments, but it's crucial to do research and make informed decisions to mitigate risks. For example, a $10,000 investment in Amazon stock in 2003 would have grown to over $1 million in 2021. To start investing in individual stocks, educate yourself on the market, research potential investments, and diversify your portfolio. With patience and the right strategies, you can potentially see significant returns on your investment. We've shared some low-risk conservative investment options that may take time to accumulate. However, if you're looking for faster profits, there are also volatile investments to consider. Exciting? Then let's not keep you long. Investing in high-return funds may seem tempting due to their promise of high returns, but they also come with high risks. Instead, it's wiser to opt for investments that offer the best value for risk, even if the returns may be low. One great investment option for low-cost and long-term returns is exchange-traded funds, ETFs. Cathie Wood's ARK investment has become well known for doubling the value of select ETFs over the past year. For instance, ARK Autonomous Technology and Robotics ETF, with assets of around $4 billion, could have turned a $10,000 investment last year into $23,060. Similarly, the ARK FinTech Innovation ETF, with roughly $4.5 billion in assets under management, could have turned a $10,000 investment into shares worth $23,410. Meanwhile, the largest ARK Invest ETF, the ARK Innovation ETF, with around $27 billion in assets, has risen by more than $10 million since 2020. By the end of the year, investors with $10,000 capital had earned up to $26,000. So, while high-return funds come with high risks, investing in low-cost and long-term ETFs, like those offered by ARK Invest, can provide excellent returns over time. It's essential to do your research and choose wisely, but the potential for significant returns is there. Another high-risk but with a high-return investment is options trading. Sounds familiar? Options trading is a type of contract that grants the right to buy or sell an underlying asset at a fixed price and time. While it may seem like placing bets on the stock market, it can offer consistent income. However, it also comes with the risk of losing all your capital. One instance is the GameStop saga in early 2021. A group of individual investors on the social media platform Reddit encouraged each other to buy shares and option contracts for GameStop, a struggling video game retailer. The collective buying caused a short squeeze on the stock, where investors who had bet against GameStop's success were forced to buy shares to cover their losses. This further drove up the stock price, causing massive losses for the short sellers. Many individual investors who bought GameStop options contracts made significant profits, but some also lost substantial amounts of money when the stock's price eventually dropped. This situation highlights both the potential for large profits and the significant risk associated with options trading. It's important to understand the basics of options trading, including paying a premium for the contract and monitoring future prices to make profitable decisions. By doing your research and making informed decisions, options trading can be a potentially lucrative addition to your investment portfolio. But remember, it's essential to understand the risks involved before diving in head first. Lastly, copy trading. Have you heard of copy trading, where you can learn from the strategies of seasoned investors and follow their lead in the market? For those who are not familiar, copy trading is a type of investment strategy where a novice investor copies the trades of a more experienced investor. The novice investor's account automatically duplicates the trades made by the experienced investor's account. While this offers a potentially high return on investment, it also involves risks. One scenario is the case of eToro, a popular social trading platform that offers copy trading services. In 2017, a user named Jay Smith, also known as Jay Nemesis, became one of eToro's most successful copy traders. He started with a small investment and turned it into over $1.5 million in just 3 years by copying the trades of other successful traders on the platform. This shows the importance of thoroughly researching and evaluating the track record of the trader being copied, as well as having a solid understanding of the risks involved in copy trading. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." Investing your $10,000 wisely requires patience, strategy, and a long-term mindset. With the right investment choices and a willingness to stick with them over time, you have the potential to achieve significant returns and reach your financial goals. So take the time to do your research, diversify your portfolio, and keep learning as you go. Remember, investing is a journey, not a destination. Are you ready to take control of your finances? Subscribe to our channel for more tips on savings and investments. Don't forget to turn on notifications so you never miss a new video. Let's grow our wealth together. Stay tuned.